What's up, everybody? Crypto Joe here. We have a major week this week. 3 major events are going to happen this week, 2 of them today. So if you're watching this on Wednesday, May 7th, there's a lot going on today. If you're watching this after, that's okay because this information will still be relevant. With that, remember, every single day in crypto is an adventure, so make sure to hit the subscribe button now so you can come back and see what's going on in my journey. I'm obviously not a financial advisor. This is not financial advice, so make sure you do any of your own research prior to getting involved in anything we talk about here today. So look, there's 3 major events going on this week. One of them is an upgrade that's happening today, obviously the Fed meeting, and there's a third thing that's happening on Saturday that I think will blow minds. And so with that, let's get right into it. Ethereum, first up, today is the Pectra Upgrade. It's the Pectra Upgrade. And if you look, I thought the halving referred to Bitcoin's mining rewards going in half, but really it meant the price of ETH going in half. ETH is down 55% from its January highs or December highs. It's really lost steam, and it's got to do something massive in order to get these people back. You know, anytime you have a chart that looks like this for prolonged periods, it's not great. Now, people will hate me for saying this, but Ethereum really needs to up their game. They really need to up their game. And the Pectra upgrade, I don't think is enough. Obviously, it's garnered some let's see, in the last week or so, we're up 20%. I mean, that's not terrible on ETH from April to May. But, you know, we've still got a long way to go to claw our way back to not even these highs, but just back to interest, right? So look, Ethereum upgrade, the Petra really it's mashing 2 upgrades together, the Electra and the Prague update. And I look at the price of Ethereum over time versus the updates, and typically we kind of climb into an update. And this is something that I do believe, where is this graph? I made a little chart. Here we go. This is not perfect, so don't give me a hard time. I created this in Canva with some overlays. But look, you know, we had the frontier, which is the beginning. You know, Ethereum is about 70 cents, 75 cents a token. Homestead, you know, all these updates, and look, they climbed up. Dencun was last year, was at like $3,200. Now we're down at Petra. This is, again, not a perfect overlay. I apologize. My skills aren't as great as I thought they would be. But we're down here on price, and we're kind of creeping up a little bit, but can we regain even the highs where we were with the Dencun update last year? So we'll see. I mean, obviously there's some big impacts of this update having to do with security and a lot of security things, batch, you know, gas costs, batch updates or batch transactions, things like that. And they're way more technical than we allot for this amount of time. So just be aware the Pectra update is happening today, I believe, unless something happens, but it's supposed to happen today. So I hope that really turns, I hope with that there's new excitement around this, but I just don't think this is such a radical update that we're going to see major price improvement based on this alone. The macroeconomic data is playing a much bigger role right now. And with that, let's talk about the Fed. What to expect today from the Fed. The Federal Reserve is meeting. The FOMC meeting is today. And we're talking about Fed Chair Jerome Powell and his board of governors. They meet for, it's usually a 2-day meeting. So probably Tuesday, Wednesday. They have their results at 2 p.m. Eastern Standard Time on Wednesday, May 7th. And then at 2:30, Jerome Powell speaks. Now, the 2 p.m. update is enough to move up markets because they'll mention whether they chose to raise the rates, lower the rates, or keep them the same, and any other, you know, news but their language is very specific. They don't get very out there with the language. It's not until the 2:30 update by Jerome Powell where he speaks and kind of gives the reasoning and the rationale behind it that we're going to get a lot of the insight. So you might see markets move at 2 and then move again in a different direction or the same direction at 2:30. Now, what to expect from today's meeting? It's widely accepted that today the Fed will not change their rates. It says it's widely expected. They said the same dang language. Widely expected to hold its key interest rate steady on Wednesday as officials wait to see how President Donald Trump's tariffs will ripple through the economy. This sits exactly as the Fed meeting probabilities for the target rate changing. It's a 95.6% chance that it's going to stay the same, 425 to 450 basis points. And so that's 4.25 to 4.5%, right? So it's widely accepted that nothing's going to happen. Now, if the Fed, because they're feeling a lot of pressure from this administration, to lower the rates. And without getting political, is it time? I mean, there's a lot of mixed data out there. The GDP was negative, but then some will say, well, it's actually positive when you take out these things. Well, the price of oil has gone down 20-30% since President Trump took office. Literally, OPEC is raising their output, and we're seeing the price of oil just go down. It's at $59 a barrel. We were all the way up here, $84 a barrel back on July 1st of last year. In the beginning of this year, we were at $78 a barrel. So we're significantly reduced price of oil. Now, the price of oil, as I said a million times, is included in every goods and service sold across the planet. I mean, you can't get the goods there. You can't, in a lot of cases, you can't manufacture them. People can't get to work. The price of oil has a big effect on the broader economy. Look, if my monthly allotment for gas is $100 a month, and now oil has gone up 30%, I'm paying $130 a month. That's $30 less I have in my pocket to spend on goods and services other places. It's a sunk cost. I'm not getting that money back. And it didn't provide me any added utility. It just cost me more. And now that's $30 I could have bought crypto with. That's $30 I could have, bought something else. And it's just a sunk cost. It doesn't do anything added for me. To me, it's like putting new tires on the car, but people will argue with me on that one. I know you need new tires on your car. But look, the price of oil has gone down sharply, and that has to weigh on the Fed, because this really, in the last 4 years, this is the lowest price of oil that we've seen in the last 4 years. Look at this. We haven't seen this price of oil since January 25th of 2021. I'm pretty sure that was inauguration day of President Biden. Interesting. And so we've seen the price of oil shoot up to as high as $117, $115 a barrel. Was that right? $114 a barrel. So yeah, pretty significant decrease since then. Almost 50% reduction cost of oil since its height. That is crazy. So I don't anticipate the Fed dropping the rates today at all. If they do, it would be a shock to the markets. The markets would react quickly. The stock market would boom. But then it might pull back. They say, well, why are they dropping the rates so rapidly when no one expected it? And then you might see it go the other direction. I don't know. I'm speculating right here. The price of crypto would shoot up because they know liquidity is next, unless there's a global recessionary fear, and that's counteractive to more liquidity. So what we want our cake and eat it too. We want more liquidity, but not global recessionary fears. And how we get that is the strong economy with lower inflation. The Fed does not care about markets. They don't care about your stocks. They don't care about your crypto. Yes, there's going to be a lot of pressure on them if the stock market's tanking, but their goal is inflation 2%. And I believe we're already there. I believe the Fed is holding the rates because they want to see what's going on with the tariffs. But this next piece of news is something that, if it happened last week, might change the mind of the governors this week, or today, I should say. And that really is China and U.S. to hold talks in a neutral land of Switzerland this Saturday. So we have our the U.S. Treasury Chair, Scott Bessent, I don't know, I don't get that right. U.S. Treasury Secretary Scott Bessent and Chief Trade Negotiator Jameson Greer will meet China's economic czar He Leifing in Switzerland this weekend for talks that could be the first step towards resolving a trade war disrupting the global economy. Well, I'll tell you this, India has already made moves to take over China's position. Apple is moving some manufacturing to India, and they've said they're going to move a lot more there. Well, that's going to really weaken China. If these major skilled electronic developers and manufacturers move from China and diverse their risk, which I believe is a good call, then look, China's going to lose power, and you don't. This is dangerous. This is an end of a regime, and you could see major moves by China to block that from happening, or to make up in other places, or to just hurt and damage these things. So these are my personal views. There's no fact behind this. These are theories. But the reality is that China, you don't corner a sick dog, right? Not that China's a sick dog, but their economy is hurting. They're printing money to no end. Now, they're doing that to manipulate trade. I get it. But at the end of the day, China and the U.S., China will want to make a deal. U.S. wants to make a deal. It's mutually beneficial to make a deal and to settle the world economies. And everyone will be flowing back into the U.S. when this happens. And it will be a big, big boom for us, I believe. Now, call me whatever you will, but I'm just looking at the macroeconomic data. So this all in all is very bullish news. So I'm looking for a couple things today. I'm looking for the Fed to probably make no moves, probably talk about ending of quantitative tightening. I don't think we're going to hear much of quantitative easing because it's really not a thing. I know there's a lot of rumors going around that like the Fed bought $20 billion worth of T-bills. They did, but they did that as a bond rollover. Ones were coming off. They replaced it with new ones. This happens regularly. It's maintenance. Same thing happens with mortgage-backed securities. When these things mature, they roll it over to the next maturity date. So no, the Fed did not start quantitative easing behind the scenes without telling anyone the day before a meeting. Just doesn't happen that way. I could be wrong. Let me know down in the comments. But with that, that's all I got. I hope you got some value out of this. I hope you have a great day. I hope there's a lot of hopium going on here. I hope Ethereum doesn't go another 50% down. And I hope Bitcoin just booms and blasts out there into space. With that, that's all I got. I'll talk to you next time.